Anyway, unless out of love, one should not be paying for another person's purchases. Why do we need to pay for another person's purchases unless out of love? So maybe we are going to know in this video the organizations actually are in love with the executives, and that is why share options become expense in companies' accounts. So welcome to GJAMES Associate channel. My name is Gbenga Olatunji FCA. Why are shares option an expense in the AR&A, that is annual reports and accounts? We need to talk about two things. Primarily, we need to discuss the vesting period. The vesting period is the period between the time an organization gives to the employee or the executive the due numbers of shares that they've promised. So that is under share option. When we are talking about executive remuneration, share option is of those packages, and basically executive remuneration is structured in such a way that it meets the need of the executive, that is the employee himself or herself. It meets the short-term need of the organization, the medium-term need of the organization, and the strategic focus of the organization, that is the long-term need of the organization. So the share option actually falls under the third category, that is the long-term need of the organization, in which they want the executive to have a perception that they are part of the organization's shareholders and stakeholders, can work towards maximizing the public image of the organization, particularly the exchange, the capital market, that is value. They want them to ensure that there is increase in the share value, market share value of the organization. So this is one of the aim of share options. So why then is it expensed in the record of the company and not paid for by the? That is what we want to answer. Because it's part of the package signed in the executive contracts of employment, that you have your basic, you are going to have this allowance, maybe housing allowance and the like. And equally, if you spend, let's say for example 3 years with us, we are going to give you so and so number or units of share, let's say 200,000 units of share. If you spend more than that, we are going to give you maybe 500,000 units of share. So that between that 2, 3, 4, 5 years, those are actually the vesting period. So for example, an employee, let's say the chief executive or the chairman of the board, who is a non-executive director, spent, let's say, 2 years. If the contract says that he or she we have option for shares at the 3rd year, meanwhile he or she had spent 2 years and quit, then he or she will not be able to enjoy the option, because it's part of the contract that the more you spend time with us, the more you add value to the organization, the more equally will we give you an option at our own costs to have the shares of the company. And at future time, you could decide to sell it off, you could move on and still retain our shares and the like, whatsoever you want to do with it. but know that you have these other options in your package of remuneration which are not monetary basically. So there are some packages in the remuneration package that are not monetary, like that of the basic is monetary. Basic salary is basic. So but options are non-monetary, but they could be converted to. From GJAMES Associate channel, we've done justice to why shares option are expensed in the book of account of the organization and not actually being paid for by the executive. Like and comment, subscribe from GJAMES Associate channel. Follow us on all social media. Gbenga Olatunji FCA has been speaking. We have value to life. You could trust that next time we meet, we are going to bring out another important topic in finance and accounting. We are value to your business.